Good day, everyone. Thank you for coming into another class of financial accounting with your trusted online partner, ICAN Online Tutors. ICAN Online Tutors. Today, we'll be looking at control accounts and reconciliation in our ATS class. ATS 2 class. So we'll be looking at control accounts and reconciliation. By the end of this chapter, readers should be able to explain the meaning of control accounts. They should be able to prepare receivables account and payables account and their uses. They should be able to perform control account reconciliations for both the receivable and payables control account. At the end also, they should be able to perform supplier statements reconciliation with payables ledger information. And finally, at the end, we should be able to identify and correct errors through control accounts reconciliation. As usual, if there is at any point in time that you have questions to ask, please call my attention to it. We'll take the question, and as you know, as is our usual way, you will get an appropriate answer. And if you're watching the video, you have any question, pause the video, go back again, listen to it again one more time. And if there are any questions, please send it to the WhatsApp group and we will answer it appropriately. So to kickstart, what is a control account? A control account is an account which is debited and credited with the totals. Let me get my lighter. What's going on here? Okay. Which is debited is an account that is what? Debited and what? Credited with totals. We credit it with what? Totals of the individual transaction already posted in the individual ledgers. It follows, therefore, that the balance in the control account must be equal to the sum of their separate balances, extracted from what? From the individual ledgers. In this way, it helps us to provide check or control over the entities, or over the entries rather, made in the ledger accounts. Control accounts are also referred to as total accounts. They are referred to as total accounts. So what are the usefulness of a control account? Control accounts are useful and important in many ways. So for a control account, you will have the receivables control account, you will have the payables control account. So you are looking at these two informations to say, okay, I have posted these informations inside my ledger. I've posted Yashola is owing me 50,000 naira. I've posted that I'm owing Otunrayo 250,000 naira. After all these things, and you get your final receivable balance, you use this control accounts. You post these totals into your control accounts to check if any errors were made during the process. We'll look at this in details, but let's quickly just take the usefulness of control accounts. One, the balances extracted from control accounts could be used when preparing interim financial statements, rather than going through the laborious extraction of schedules of balances of the individual ledger accounts. You can use the balance that you extract from your control account and use this to prepare your interim financial statement. Number two, control accounts operate as a check or control over entities in the individual ledger accounts, especially when different officers maintain the records. This is now what you use to check. This one is posting this one over here, maybe is posting this leg of the transaction. Another person might be one posting the cash leg of the transaction. Another person might be another one posting the different things, the purchase day book. So control accounts operate as a check or as a control over all these entities to ensure that what they have posted the right information in those respective ledgers. Number 3, it helps in what? Early detection of booking errors revealed in the trial balance. So to show you that, oh, you made an error here, this does not balance, or the total here does not translate to all the aggregate totals that you are bringing from your ledgers. Number 4, the application of control accounts knowledge is useful for deterring missing figures, unknown figures of financial items under incomplete record situations. So in a situation where it's not even those that an error was posted, or is a situation where they did not even put in any figure at all, or it's missing, control account knowledge, the knowledge of control accounts can help you to determine or to deter such situations. So control accounts can be maintained for all the different classes of ledger kept by an enterprise. However, maintaining control accounts for trade receivable, which is credit sales to customers, and trade payables, which is credit purchases to suppliers, are more popular because it involves persons outside the enterprise environment. So you can do control account for almost all the ledgers that you have in an enterprise. However, what we normally do is for a business is that these are the ones that are popular, and those are the ones that we'll look at in this class. We'll be looking at the trade receivable control account. We'll look at the trade payables control account. We'll look at these two accounts together, and what is the reason why they are very popular? Because they involve people outside the enterprise, outside the organization. So you want to put an additional view, an additional leg on it to look at what's going on here, what's going on here. Are you shortchanging yourself, or are you taking more from your customer? So we'll look at the first one quickly, the trade receivable control account. The trade receivable control account. It is also referred to as what? As the sales ledger control account, or total receivable account. It is an account for recording value of transaction in totals with what? With credit customers. With credit customer. So you use this account to record people that are owing the business. People that are what? That are owing the business. As money is going out, as money is coming in. As money is going out, as money is coming, you use it to record. So as people are owing you more money, you will increase the account by doing what? By debiting the total. And as people are paying you, you will decrease the amount that people owe you, right? By crediting the totals. So in the account, all transactions which increase, as you can see, all transactions which increase the total amount owed by the trade receivables are debited in total, while all items or transactions which decrease the amount owed by the trade receivables are what? Credited in totals. If you remember your normal posting for accounts, it will be easier for you to know which one goes which way, and which one goes which way. If you remember that a trade receivable account is an asset account, and an asset account is what? Is a debit balance account. So you will remember that anything that is increasing an asset is what? It's a debit entry. And whenever an asset is going down, is what? Is a credit entry. So you see, the balance on the receivables account, debit balance, is the total amount currently owed by all customers. That is the amount not owed by only one customer, but what? But all customers. This is how the trade receivable control account looks like. These are the items that goes on the debit side, and these are the items that goes on the credit side. You can see opening balance brought down, if any, and the same thing, opening balance, if any. Credit sales for the period, credit sales, it is what? Increasing the receivable amount. Opening balance is the people that owe you, that are owing you that you have before. You made more credit sales. Your receivable is increasing, so it comes on the debit side. Somebody gave you dishonored check. Gave you a check that was dishonored. Assuming the check was honored, it will be on this side. You can see cash or checks received from customer. By the time they pay, it reduces your receivable. Because it's reducing your receivable, it comes on the end. If the check was dishonored, you post it back here. Dishonored bills receivable. Bills receivable is a bill, is like a bill of exchange, like a check, right? It's not like a check, but it's like a bill of exchange that is drawable on demand. So, but look at it from the angle of how a check operates. That's exactly how it operates. So if it's dishonored, that means the person is still owing you, right? So it increases the values on this side. And when the bills of exchange, bills receivable is honored, then is what is on this side, because it reduces the impact of that item. If you pay cash to customers, to be on this side. If you receive cash from customers, it will be on this side. Because if you receive cash, it's reducing this effect. But if you pay cash to these same receivables, it will increase the amount that they are owing you. So if you look at all these items, you can see that these items on this side, on the debit side, on this side of they are items that increases the receivable amount. Discount allowed. Just look at it one by one. Discount allowed, revenue adjustment, debt recovery expenses, all these things increases what? Your receivable. But if you look at the one on this side, on the right-hand side, discount allowed, not discount received this time, is what? Discount allowed. This is you giving what? Discount to these guys. So he's owing you money of 200 naira, but he said, don't worry, I'm giving you a discount of 200 naira. The person bought goods worth 1 million naira from you on credit. When I said, oh, I'm giving you a discount of 10% if you pay me before 30th August. Discounts allowed will reduce the value of what this guy is owing you. You can only say he's owing you 1,000 naira if by 30th August, the guy has not paid. And that's when you now bring it to this side again. Discounts disallowed, discounts allowed. You allowed the discount before, but he didn't pay you maybe at the point in time. Do what? He's still owing you, it goes back to 1,000. So this increases this side, while this reduces this side. Look at the next one, return inwards and sales returns. Returns inward, returns inward. You know, this side, on the left-hand side is where you have your credit sales. Return inward, the guy now decides to what? Return some of the goods that they bought from you. You will reduce the value of whatever credit sales you have made to them. So you use it to reduce the value of the discount that you gave to them. The same thing with bad debts written off. Bad debts written off. This guy is owing you this amount. You have written off a portion of it to say you are no longer owing me. You will reduce the receivable. So if you look at all these items that are on the right side, they are used to what? Reduce the value of this receivable. And it goes back to what we said here. all transactions that increase the amount owed by the trade receivable are what? Are debited. While all transactions that decrease the amount owed by the trade receivables are what? Are credited. So let's take an example.
Revenue adjustments.
Do you have?
Revenue adjustments.
Okay, revenue adjustment. So okay, if you look at this side, customer fails to a discount when not expected to do so. So for example, customer says he has taken a discount when he's not expected to do so, or he removed the money when he's not expected to do so. Do you understand? So let me bring out my lighter. I'm not seeing it. Okay, I'm seeing it now. So this past part here takes a discount when he's expected to do so. This part here is for this side. Customer takes a discount. So this part here, move this information to this side. I didn't even notice that, otherwise I would have typed it. I just screenshot it from the material and used it to explain. I'll have just taken it out. So on the revenue adjustment, customer fails to take a discount. Takes a discount when not expected to do so. He has taken the discount before, right? You know, we were talking about discount allowed, right? And we said if it is discount allowed, you use it to what? To reduce. But in a situation where we did not even allow the guy to take discount, but he has already applied the discount to the thing himself. Do you understand? That amount, the difference that he took himself, we are going to take it back from him and do what? Add it to the amount that is owing us. You can see that this one here increases what? The amount the guy is owing us. While on this other side, the customer takes a discount when he's actually expected to do so, or maybe he did not take it. The customer did not take the discount and is expected to actually take the discount. So to adjust the receivable account, the discount the guy did not take, right? You would pull it back on this side to reduce what? The amount is actually owing you. Do you understand? Should I continue?
Yes, sir.
Okay, thank you. So let's look at this example. We'll look at this example together. Okay, so I'm trying to bring out my Excel. Can you see my Excel now?
Yes, sir.
Okay, let's do half screen so that okay. The information below were extracted from the books of IoT Ventures, a sole proprietor at Lagos, Nigeria, for the year ended April 30. All figures are in Naira. So what are we required to do? We are required to do what? Prepare the trade receivables control account, indicating clearly the balance due from trade receivables at the end of the year. Indicating clearly the balance due from trade receivables at the end of the year. So let's take this one by one. Sorry for that. So let's take this one by one. We'll use the information that we had earlier, right? You remember this table? This is the same format that we are going to use it on. So let's bring it out. So first of all, let's pick the information one by one. We'll do our debit side, trade receivables control account. Trade receivables control account. I said we will have what? Our debit side and we will have our credit side. So you just divide your book. I hope you are working with me. You know, when you do things with your own hand, it usually sticks more. I'm expecting that you're also dividing your book. So like you're drawing a T ledger. So we'll put the amount here, we'll put the, we'll put the narration here and we'll put the amount here. Is that good? Am I good to go? Am I good to go? Are you following me?
Yes, sir.
Okay, so let's go back to the question. So trade receivables balance as at what? May, that would be what? Balance, trade receivable balance brought down. How much is it? How much is it? We have a lot to cover today. Please respond though. 2056190. There's no 8 there. 2056190. Okay. So you know the first line item is what? Is the balance carried down, right? Sorry, the balance that was brought down from the previous year, May 1st, 2021, right? Are you with me? I need to be sure that you're following me or I'm the only one here.
Yes, sir.
So it's going to be what? A debit balance, right?
Yes.
So we say what? It has a debit balance. So tell me totals during the year, sales day book, your total credit sales during the year. Will it be a debit balance? Will it go to the debit side or will it go to the credit side?
It will go to the debit side.
Yes. Anything that increases our receivables. Current, let me just write it in simple English. Current year credit sales. How much is it? 15,996 500. 15,996 500. Hold on, please. 15,996 500. So what about this one? Return inward journal. Return inward journal. Will it be a credit? Will it be on the credit side or will it be on the debit side?
On the credit side.
On the credit side, because what?
It will reduce the debtors balance.
Yes, we sold something to them, and what? They returned a little part of it. It will reduce the amount they are owing us, and it's what? 784,600. 784,600. 784,600. Okay, so the next one, cash and checks received from customers. Cash and checks received from customers. What would this one be? Will it be a debit or will it be a credit?
It will be a credit.
It will be a credit. Thank you. Because some customers have what? have paid us down. They have paid us some of the money that they owe us, cash and check. Cash and check received from customers. The amount is what? 13,235,400. What is the next one? Bad debts written off. Bad debts written off.
Credit side.
It will be on the credit side. On the credit side, are you sure?
Yes, sir.
Okay, because we are reducing what? The amount that they are owing us. How much is bad debt written off? 416,500. What about discount allowed? Credit or debit?
Discount allowed. Discount allowed is credit.
Discount allowed is credit side. How much is it? 1,006,200. What about dishonored check? Will it be under credit side or debit side? Dishonored check.
Dishonored check will be under debit side.
Okay, dishonored check, because we have removed it from that they paid us before, and
yes.
We found out that what? The bank did not pay. So we do what? It will increase how much they were owing us. What about bills receivable?
Bills receivable is the debit side.
Why? I explained bills receivable the other time. Do you remember?
Yes.
What did I say about bills receivable? I say you should look at it like in the form of what? Of a check. Is a bill of exchange drawn on the drawing that is payable like immediately. So it's like a form of check. It's like a bill of exchange. Don't let that receivable part, don't let it fool you, right? Bill receivable is like a check. So the way a check works, that's the way it works. So bill receivable is like what they've paid. You can Google it too. Bill receivables, that's 2469,280. Bills receivable. What about legal expenses on debt recovery charge to customer? Will it be on the debit side or will it be on the credit side?
On the debit side.
On what?
On the debit side.
Why?
Because it's an expenses on how to recover the debt back.
Yes, we are incurring additional expenses. So most likely we'll transfer all these costs to increase what? The amount the guy is still owing us. 378,900. Did I put the amount for bills receivable? Okay, that's correct. So what about disallowed discount?
Debit side.
Debit side. If you can remember where allowed discounts, discount allowed is, you can just know that the opposite side is what? Disallowed discount. How much is this? 207,800. Then there's receivable ledger balance transfer to payables account. This one will be on the credit side. So 311,614. So this one is somebody receivable transfer, like a set off. Normally it's supposed to be on this on the debit side, because that's where you have your receivable accounts, right? Now you are transferring this amount to the payables ledger, right? To set it off. So it will come here to cancel whatever it's here before. Do you understand? So now we are going to sum both sides and put in like the same way we do for our when we do our balancing. So you sum both sides and you pick the difference. So the difference is usually supposed to be on the debit side. So let's sum this side first. So if you sum this side, this is what you have. You sum this side. I hope you are following me. This is 18. So you do what? What do we do here? Balance what? Balance what? Motunrayo. Balance what? Motun, are you there?
Yes, sir. Yes, sir. I know that I did not move to my mind. Balance carried down.
Balance carried down. So balance CD. I want to be sure. So, and how do we do balance CD? The difference between what? The two sides. I know you won't take it because of circular referencing. So let's do the balance separately somewhere here. 20,000 minus 18,000. 2,428,000. That's the difference. So put the difference here and see, they are now the same. So what we just do is now do what? Balance brought down on this other side. My Zelle is starting to act up. Oh, I can't click again. Hey. Okay. Balance brought down will be how much? 24,29296. So this is what we call the receivable control account. You can see we have used it to do adjustments. We have used it to pick up some of the informations that were not posted earlier, and we've adjusted this. So this is what we call the receivables control account. The same thing, you do something similar also for the trade payables control account. We'll look at that in subsequent exercises. So let's just move on. So there's another thing we call the receivables control account reconciliation. Excuse me, please, let me take water. Okay, thank you. The receivable control account reconciliation means making sure that two figures or totals are consistent with each other and they agree with each other. The control accounts assist in making sure that transactions have been recorded correctly in the account. Transactions have been recorded correctly in the account. This is because if the transactions have been recorded correctly, the balance on the receivable control account in the general ledger should be equal to the total balances of all the words individual customers in the receivable ledger. So you have receivable A, you have receivable B, you have receivable C. All these other guys, this one owes 10,000. This one owes 10,000. This one owes 5,000. That's how much he's owing us. This other one owes 1,000. The total of all the receivables that they are owing us is what? 16,000. By the time you do the receivable control account, you should actually have 16,000 as your balance brought down. A reconciliation check can be made to make sure that these totals are what? Are the same. If they are different, the cause of the errors should be found and what? And corrected. So this one owes you this one, this is 16,000. By the time we do that, our receivable control account, our balance brought down to should be what? Should be what? 16,000. Should be 16,000. A receivable control account therefore involves a comparison between what? The totals, looking for the reason for any differences between them, and correcting errors that are discovered in the checking process. When you hear anything like reconciliation in accounting, in bank, in anything, is to do what? Is to check that transactions that you posted before, that you posted it properly. Is to check that, oh, this ledger that I have with me and this account that I have with me, I'm checking the two information in those two systems to compare that they are the same, or that they have been imputed what? Correctly. So some errors that may cause differences in the ledgers in the receivable control account is possible, is one of the following, could include any of the following. You correctly debited the receivable control account with the total credit sales. You did that correctly, while the posting of one or more individual transactions was omitted. It's possible that the balances that you moved to the control account was correct in the total of credit sales. It's also possible that you correctly credited the receivable control account with the total cash received from customers, but a particular receipt was not posted in the customer's personal account. You remember when I was saying this, I said you have the control account here. The full cash that you received, it's possible you have written it here in the control account, but the customer that actually paid the cash, you forgot to reduce it from their obligation, or you forgot to reduce it from their obligation. This one is no obligation. So you did not record the correct figure for the customer here, or you did not record the correct figure for the customer here, but the total aggregate amount that they paid here has been reflected in the receivable control account. It's also possible that you correctly debited the receivables control account with the total amount of dishonored checks from the customers, but a dishonored check from a customer was not posted in the customer's personal account. If you look at all these things that we've been looking at, you see control accounts, individual accounts. You posted in one side, you didn't correct it in the other side. You can see number 4, over undercasting of the sales book such that the wrong total credit sales figure was used in debiting the receivables control account, while the customer personal accounts were correctly debited. Number 5, the recording of transfers or setups between two accounts of same customer made in the general ledger but not made in the receivable ledger. When you were doing the setup, you recognized in the general ledger, but you didn't transfer it into the receivable account to say, reducing the receivable amount, the amount you are owing me, inside the receivable ledger. Whenever there's a difference between the totals, the reason for the difference must be what? Must be ascertained. It must be investigated, and the error must be discovered, must be corrected to make the two totals equal. You must make sure what? That the two totals are eventually equal. They must be equal. You must make sure that you correct the error and the total are equal. And how do you do that? It's either you are adjusting the control account balance, or you are changing one or more balances from the individual or personal account of the customer. Because if you look at it, what are the reasons for error? It's either what you posted a receivable account correctly, or what individual account was not posted correctly. Number two, receivable account was where customer's account was not posted, customer personal account was not posted, like that. So these are the two areas where you will make the adjustments. Let's look at this example. Are you still with me? If you understand so far, please say Yahoo.
Yes, sir.
Okay. So let's look at this example. The balances of receivable ledger account in the general ledger of Aduke Enterprise is 1,182,180, while the balances on the individual personal accounts in the receivable ledgers are detailed below. You can see the total. Aduke's Enterprise investigation into the difference between the two totals highlighted the following. Sales return of 70,600 by customer Ayomi has not been recorded in what? In customer Ayomi's account, but in the receivable ledger, but are included in what? In the control account balances. Our what did they ask us to do? Prepare receivable account reconciliation. Let me bring out my Excel so that we can take it from there. Okay, so let's start. I don't know what's going on. Okay, finally I can click on it. Okay. So I'm just going to use this. I don't have to design that thing again. I'm going to delete whatever is inside. I'm just going to use the information. Okay, so let's start with the first information. Can you still see my screen?
Yes, I can see it.
Okay. So let's start with the first information. Trying to manage my screen. The balance of the receivable ledger account in the general ledger is what? General ledger is 1,182,180. So that is what? The balance that we have here. Balance. Is this balance brought down or balance carried down?
Balance brought down.
Are you sure?
Yes, sir.
Okay. So balance brought down. How much is it again? 1,182,180. 1,182,180. We'll be doing lots of calculation now, so maybe I should just please hold on. Let me. Okay, so for receivables control account, reconciliation means that you are just opposing two figures together to be consistent with each other. We've done this part. Apologies, my screen is not moving. We stopped at the question. Okay, so look at this example. The balance on this account for Aduke is 1,182,180, while the balances on the individual account, personal accounts in the receivable ledgers are this. So what you need to do, bring up your ledger, bring up your trade receivable account, draw it up. Once you draw it up, you see put your balance brought down for the first part. You know, we said receivables account is a what? Is a debit balance. So the first line item, Also, your ledger balances, the total, you can do it two ways. And you do your total receivable ledger balance, which is this 1114. You add it, put it here. Now you look at every line item and we'll adjust it accordingly. Don't look at the fact that I've done it here, but I'll just quickly take it one more time. So look at the first line, sales returns of 17,600 by customer Ayomi have not been recorded in customer Ayomi's account in the receivables ledger, but are included in what? In the control account balance. It means that we are only making this adjustment in the account that it was not recorded, which is what? Customer as Ayomi's personal account. So meaning that sales return of 17,600, 17,600 will be on the credit side. It was because it's a sales return. You sold to the customer, and the customer is what? Returning part of it. That means the amount the customer will be owing you will be lesser. So customer Yomi's balance that will be owing us is expected to be lesser. So you do sales return, customer Yomi, you remove 17,600. The first item in this question is done. Now let's look at second item. Notwithstanding the strict policy of Aduke Enterprise, customer Gbenga was allowed a discount of 5,280. When you give a customer discount, it reduces the amount they are owing you. So that one is sorted. We know that this reduces the amount the customer is owing now. This has been posted to his personal receivable ledger. It has been posted to the customer's what? Receivable ledger, but the transaction was not recorded in the general ledger, meaning that we are going to the general ledger to make these adjustments. And we are doing what? We are using it to reduce the total receivable amount, and it's 5,280. We go to the credit side of the control account and we write discount allowed, and we write post the 5,280 on the credit side. Now let's look at item number 3. Customer Modupe had supplied goods valued at 7,800 on credit to Aduke Enterprise. It was agreed that this amount should be set off against the amount owed Aduke by Modupe. This guy here, Modupe, is owing us money and has also supplied us goods. We now said, the money you are owing me, use it, the money I'm owing you, or the money you are owing me, use it to reduce the amount I'm owing you. How much does customer Modupe owe? She's owing us 176,000 naira a year. Now says, amount I'm owing you, use it to do my own. I pay you from me, you pay for me. That's what we call in accounting contra entry. Set off. You're using it to set each other off, contra entry. But now, how do we post? We need to find out. No postings have yet been made to effect this adjustment in the general ledger or in the receivables and payable ledger, meaning that we have to post in the general ledger and we have to post in the personal account. So how do we do that? We go into the general ledger account, post 7,800 to reduce the total receivable, and go into the set off for the personal one and reduce the total amount that Modupe is owing by 7,800. We posted in both accounts. Now let's go to item number G. Credit sales amounting to 38,400 made to customer Nkechi has not been recorded in his personal account in his receivable ledger, but is included in the receivable control account balance. Credit sales, meaning that customer Nkechi got additional credit sales during this period. And we said what? If the receivable is increasing, you do what? You debit that particular account. But where are we debiting and where are we crediting? Let's see. Nkechi has not been recorded in Nkechi's personal account, meaning that this is the account that we are working on. Let's go back to our Excel. Credit sales. Nkechi is going to increase by 38,400. Now that we have posted, okay, now we have one more, the last one. Bills receivable of 12,100 accepted from customer INE for past settlement have been recorded in what? In the personal account, but has not been recorded in the general account, meaning that the control account has not reflected this amount. So we're only adjusting what? in the control account. Bill receivable is like a check that has been paid. So you have received a check of 12,100. Just see it like when you see this receivable, it's like a check. It's not a check, but it functions like a check. So you post it on this side, and you can see, do your summation down, do the summation here. You see that it's not up to this amount. It's like this. Then you find out the difference, and you put the difference to get your final amount. So this is your balance carried down here, 1157, and this is your balance brought down 1157. You can also confirm this by summing the total from your adjustment of the individual ledger account. And if you do that, you sum this from this minus this minus this plus this, you will get this. Another way to do is to do all the breakdown of all your receivables. Customer Yomi did what? Was owing us 330 from here, right? He returned 17,600. Remove 17,600 from what Ayomi is owing. You get this. From customer Benga, he was owing us 242,000. There was no information to adjust customer Benga. He's still owing us 242,000. For customer Modupe here said that we should remove 7,800 from the amount she's owing us, right? Because she gave us goods worth 7,800. We removed it from what she's owing us, 176,000 before, and we removed 7,800 from it, and this is the balance. Customer Yeni, on the other hand, does not have any information for us to adjust. You don't be fooled by this one where you have the bills receivable. Don't forget, they said this has been recorded what? In our personal account. So because it has been recorded in our personal account, we are not making adjustment regarding our personal account. We only made the adjustment when we were posting in what? In the control account. Then customer Unkechi, she was owing us 26,400 before from the question, and she got additional what? Additional 38,400. You add that to it, sum up all these customers together, you will get this, which tallies with what our total receivables should actually be based on our trade receivables control account. Now we are moving into the trade payables control account. And we said that trade payables control account is also referred to as what? The purchases ledger control account or total payables account. It is an account for recording the value of transactions in totals with credit suppliers. The same, once you understand the trade payables control account, trade receivable control account, the reverse is the trade payables control account. Trade receivable control account has a debit balance. Trade payables control account has a credit balance. Anything that increases the trade payables control account is credited into the account because what? It has a credit balance. Anything that reduces the amount that you owe your suppliers is what? Is debited in totals in the trade payables control account. And this is the structure, the items that increases the trade payable control account and the items that reduces the trade payable control account left. These ones here on the left, on the debit side, are the ones that reduces, and these ones that I ticked here on the right hand side, which is the credit side, are the ones that increases. You can see if you buy more purchases from the customer, it will increase it. Interest charge on goods that you buy from your customers, maybe they said, they will give interest period, free period of 5 days. If you pay, after 5 days, you did not pay, they'll start charging you interest on it. Any interest they charge on you increases the amount that you owe them. So it will be on the credit side. Interest on bills payable, the same way I explained in bills receivable the other time. Bills payable is also like a check on the other side. So the bills payable, if you pay it to your suppliers, it will be on your debit side to reduce it, and any other transfers that increases your payables or setups will be on the debit or credit side if it is reducing it. So look at the debit side. If you pay cash or check to your customers, to your suppliers, if you receive discounts from them, if you return goods outward to them, all these ones, they reduce your payable control account. There's this example that we have here. Look through it. I'm going to give you 1 minute to quickly do do this. Post this account, use what you have here, post this account. Is a class example. I'm only going to give you the final answer on what the answer should be. Has anyone finished? Otunrayo, do we have an answer now? Motunrayo.
Sir.
Do we have an answer?
Yes.
So what's your balance carried down?
The balance carried down is 3 million.
3 million K. Okay, so let's just pick the item one by one because our time is fast.
Million.
What do you say?
12 million.
I'm not asking for the total, I'm asking for your balance brought down.
Okay.
Okay, so do you want us to do it?
Yes, sir.
Okay, hold on, let me bring down my Excel. Can you see my Excel now?
I can see it.
Okay, so let me just copy this and use the diagram here. So we're doing trade payables, trade payables control account. So I'm going to delete all this extra stuff here. So we'll do it fast, be calling the information out so that we can meet up. We still have suppliers account to do. So payables control account balance, October 1, 2020. Will it be on the debit side or will it be on the credit side?
Credit.
Payables balance. Let me just write balance brought down, Jerry. Balance brought down, balance BD. Call the numbers 1897000. Is that correct?
Yes, sir.
Okay, so totals during the year, cash paid to suppliers. Is it increasing or is it reducing? Cash paid to suppliers.
It is reducing.
If it's reducing, will it be on the debit or will it be on the credit?
Debit.
It will be on the debit. So cash paid to what? To suppliers. How much is it? 9584593. Is that correct?
Yes, sir.
Next one, discount received. Discount received. When you receive discount, does it increases your amount or does it reduces the amount that you owe?
It reduces.
Reduces. So discount, is it going to be on the left or on the right and or debit or credit side?
Debit side.
Debit side, how much is it? 920,045. Are we moving?
Yes.
So purchases day book, your credit purchases, additional credit purchases that you made. Will it increase your payables or will it reduces your payable? Will it reduce your payable rather?
It will increase.
If it will increase it, will it be on the debit side or on the credit side?
On the credit side.
So credit purchases. How much is it? 12,330,500. Purchase return. When you return, will it increase or will it reduces?
It will reduce it.
It will reduce it. And when it reduces it, is it on your credit or your debit side?
Debit.
Yes. How much is it? 559,615.
5,615.
Okay, so we are making progress. Bills payable, is it does it reduces or does it increases our, which one is it?
It reduces it.
It reduces it. It reduces it. So if it reduces it, where will it be? Debit or debit side or credit side?
Debit side.
Debit side. But you are getting this thing now. So did you miss one figure? 1,043,350, right?
Yes, sir.
Let me also be looking at interest on bills payable. Does it increases or does it reduces our payable?
It reduces it. It increases it.
It increases it. So interest on bills payable. How much is it?
1 million.
No, interest, oh, it's not 1 million. No. 18,970 now. Huh?
Okay.
So
That's
debit balance in receivable ledger transferred what to payable ledger. You are using a debit balance that was there to reduce. Somebody is owing you, you are saying cancel off. The person will no longer owe you from here. So it will be where it will be on this side to reduce what? Your payables. So debit balance transferred here will be transfer slash set off. Will be what? 189,700. So what did you get? So the total year for this one is this. The total year for this one is this. The difference is what we look for. 14,000 minus 12 million. The difference is about 1.9. We carry this 1.9, put it here, and sum this again. They are the same now. So this will be what? Our balance carried down. And our balance brought down will be on this credit side, and it will be what? This amount. This is your payables control account. This is your payables control account. Let's move on. Let's move on. We still have the reconciliation part. The same way we looked at the payables control account reconciliation earlier, where we the receivable control account reconciliation earlier, the same principle applies here. We are trying to correct some transactions that were not recorded properly to make necessary adjustments. If the amount, the totals we get here correspond with the totals from our individual suppliers account, then we are good to go, right? And in a situation where they are not, where they do not correspond, we have to check and find out why the balances do not correspond and make the necessary adjustment. What are some of the errors that may cause the difference in this balance? Number one, just like we looked at the other time, when you correctly credit the payables account, right, in the general ledger, and while you were posting one or more individual transactions in the individual account, maybe you missed out one information or the other. You correctly debited the payables account with the total cash paid as recorded in the cash book, but payment to a particular supplier is not posted, right? It will not balance. Like the same way we looked at these things the other time. Over and undercasting of the purchases day book, such that the wrong total credit purchase figure was used in crediting payables control account, while the individual suppliers account in the payables ledger were correctly credited. Like I told you the other time, the difference, when there's difference and it exists between this total, you must do what? You must ascertain why there's an error And once it's discovered, you are either adjusting what? The control account, or you are changing one or more balances were on the individual supplier account. The same principle apply when we looked at this the other time. In this case, these guys were customers. They were receivables. They could have been a supplier account. The same principle that we used for adjusting, that same principle that we'll use for this. So because our time is fast spent, I will most likely solve only one of these examples. They are the same if you look at it technically. They are almost the same. This, and you do the reconciliation. So pick which one do you want me to answer, to attempt. Otunayo. Are you there?
Yes, sir.
So which one do you want me to attempt?
The second one.
The second one.
Yes, sir.
Okay, so let's do that. They are the same method. So let's just do the second one. So let me see. Oh gosh, so I have to go down. Let's read the question first. What are we required to do? Prepare what? The payables control account reconciliation. So let's start. The balance, sorry about that. The balance on the payables account on Benga Enterprises was what? 1,506,388 as at this. Why the total of the list of balances extended from the payables ledger on the same date amounted to what? 1,491,689. An investigation of the cause of the difference in the amount revealed what? The following. Before you start that one, first of all, go back to your account, right? Open those two things I told you about, right? Let's open our, let me just copy this. I don't like to draw that thing again, over and again. It takes time. So I'm going to adjust it. I'm going to remove all this information. So do not be afraid. It's not the same thing. It's not the same thing. So what are we going to do here? Let us be picking the information from the question and be adopting it immediately. So the balances on the payables control account is what? 1506383. 1506383. Please confirm that you can see it in my screen. 1506383. You can see my Excel, right?
Yes, sir. Yes, sir.
Okay, so this is our balance brought down from this angle. Then they said something also again. While the list of balances extracted from the payables ledger on the same day. So this is the one what? All the payables balance, like we did for the other one. Remember when we did receivables? Balance of all ledgers, all payable ledgers. So this is how I like to solve my question so that I don't miss out any information. How much is it? 1491689. 1491689. 1491689. So now let's go to the first item. Total cash paid to suppliers of 998,800 was posted to the payables control account as 981,800. Please tell me how we are going to do this. Otunayo, you should be an expert now. You are an expert. You are an expert already. Don't be afraid. Just tell me straight away. You posted cash. So in the control account here, let me show you. Let me give you. Let me help a bit. So in this control account here, this balance that we are seeing here, somebody has posted cash paid to suppliers of 998 instead of what? 971,800. How do we correct this mistake?
You deduct 9,800, the rebalance from 900
Sorry, take that again. We do what?
I said the rebalance 998,800.
Okay,
You deduct 971,000
we will
from
post
it.
that where? On the credit side or the debit side?
We'll post it on the debit side.
Okay, so let me write the two amounts out here so that we can focus on the Excel. The real amount is 998,800, right? Yes. What they posted in the account was 971,800. Did you get that part?
Yes, sir.
971,800. This is correct amount, right? Yes. And this is the wrong amount. Do you get it?
Yes.
Okay. So to correct this anomaly, when they posted this 971,800, you know that it's definitely going to be on what? On the debit side.
Debit side.
Right? So they posted this 971,800 here before they got this balance brought down. Yeah. Do you understand? Let me take you up here. Cash paid to suppliers. You know, they paid it here, right? And we now got this balance brought down here. So how do you correct if this was a mistake? What do you do to nullify this? Based on the first example that we did, and this is the solution, right? Let's say this amount was a mistake. How do you nullify this mistake so that it doesn't affect this balance? What do? You post this 958 something, you post it on the credit side. By the time you post it on the credit side, it will affect this. It will nullify this from this one, right? The same principle applies here. You have posted the wrong one on this side before you got this balance. To nullify that posting, you post this wrong balance on this side and you post this correct amount on this side. But the way accountants will do it is that, what is the correct amount? 998,800. What is the wrong amount? 971,800. What is the difference? That's what we do. We just do equal to this minus this. The amount gave us a positive figure, right? Since it's a positive figure, that means what? There's an extra 27,000 naira that the customer paid. That what? That we did not post. Am I making sense, or should I take that again?
Yeah. Yes, sir.
I can't hear you again, Motun. Your voice is low.
Yes, sir. Yes, sir.
I should take it again.
I understand, sir.
Okay, you understand. So this will now come here. You come here, you write error in cash posting. Error in cash postings. Error in cash postings will now be what? 27,000. In some instances, let me use this to make another example. In some instances, you know that in this scenario, let me go back to this question. In this scenario, the amount paid is what is larger. The real amount, the correct amount is what is larger, right? And this is the amount that we have removed before from what the guy was owing us, right? Yes. In some instances, this 971 will be the real amount that we're supposed to remove, and we have over removed. In that situation, the adjustment will not be on the debit side, it will be on this side, right? To increase what? The amount we are actually owing, to increase what? The payable value. Did I make sense? So in any way you are doing it, the correct amount minus what? The wrong amount. If you get a positive figure, it should go into the normal place where it should go to. If you get a negative figure, then you should go to the other side of where it's supposed to normally go to, right? So let's move on that. Let me move this a little bit away from this. Now let's go back to the question. A credit balance of 22,383 on payable ledger had been set off against a receivable ledger balance, but no record has been made where in the control account. They said a credit balance of 22,000 had been set off already, but it was not made in what? In the control account. In the control account. So where do we make this adjustment, please? Motunrayo, are we making the adjustment in the individual ledger account or in the control account?
In the control account.
In the control account, and we are setting off payables and receivables. Will the payable be reducing or will it be increasing?
The payable
will be what?
Be increasing.
No, you are setting off. You are using them to cancel each other. Payable is what? Payable is a credit balance before, right?
Yes.
So you are using it to set off each other. When you hear set off, they are canceling each other out. You remember when we did that, when we did this customer, let me bring out the Excel. When we did this customer, Ayeni, was it Ayeni? That one that was paying that we used set off for. You remember now, 7,800.
Yes.
You remember that said he supplied us goods. Oh yeah, I use my money to cancel each other. When they are canceling each other, it goes to the other side, right, of the transaction. So since we are doing it in the control account, how much is it? 22,383. So we come here, receivable set off. How much is it? 22,383. Are you still with me or have I lost you?
Yeah.
Okay. So the purchase day book was undercast by 93,000. Purchase day book was undercast by 93,000. You reduced, when they say undercast, it means what? You reduce the amount of credits purchases that you got. Purchase day book. So when you reduce it, that means it's supposed to actually be more than that. So what do? You go back and add it to undercast credit purchases. Undercast credit purchases. How much undercast was it? 93,000 naira. 93,000 naira. So that was how much undercast was it. Assuming they said the purchase day book was overcast, it would be what? On the other side. There was an omission of 58,311 from the. Hello?
You are not going to make any adjustments on the purchase ledger. Only the control account.
No, we're not making an adjustment. That one is on the account, right? Because they didn't mention any individual account that it affected.
Okay.
Do you understand? They didn't mention any individual account that was affected. You know, we are picking the total purchases. That's where we picked the wrong one. So we are picking the total purchases. So 93,000, yeah. Then the last one, there was an omission of 58,311 from the list of balances extracted from the supplier's personal accounts in the what? Payable ledger. So this one already tells us what? This last adjustment is where? This last adjustment, where are we doing it from? Personal account, the ledger or the control account? The personal accounts or the control accounts?
The control account.
Look at it very well. There was an omission of 58,311 from the list of balances extracted from where? The the supplier's personal accounts. They mentioned it there. The supplier's personal accounts. So when you were extracting the personal account, there was one balance that you missed out. You remember that they gave us the balance, the personal account balance from the beginning. And they said what? It was 1,481,000. It's there somewhere here now. See now. The list of balances extracted from the payables ledger on the same date was what? 1 million this. And they said it was what? Omitted. And when it was omitted, what will we do? Are we going to add it or are we going to subtract?
We are going to add it.
We are going to add it. You're on fire this night. Thank you so much. How much are we adding? 8,311. And this one will be omitted balances. Omitted balances. So now let's sum this guy together. How much did he give us? 1,550,000. How much do we have from this other side? This is the total here, so we have to calculate the difference from this side. So our balance carried down will be how much? Let's quickly do it somewhere around here. 1,599 minus 143 will give us what? 1,550. So we'll put that here. Oh, I'm supposed to do this. Oh, how am I doing again? Okay, I'll just do it again. We got the answer right now, right? It was 155,900. So we just write 1550123, and we'll call it what? Is it balance carried down or balance brought down? And our balance brought down will be what? The same amount, 1,005. You can see the solution here in bold. That now we find out that the total amount we are owing is what? 1,550,000, 1,550,000. If you look at this other question, the information are almost the same. Total paid, purchase table was undercast. See, the purchase table was undercast. So you should be able to treat it. Cash account total of 105 was posted to the control account as what? 9,500. See the same information here. Can you see? A credit balance of 13,880 on the supplier has been set up against a customer, but no entry has been made in the control account. The same thing, a credit balance of this has been set off. Can you see? So this same information, so you can take up this and try and solve that, and let's see. So let's look at this last part of today's class, which is reconciliation of supplier statement with supplier's ledger account. This one is simple, straightforward, straight to the point. It is normal for business for their suppliers to send them their monthly statements to their regular credit customers to say, bros, come here. This is the amount you owe me. You bought this from me. You returned this amount. I gave you discount of this amount. All this blah, 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 blah. This is your final balance at the end of this month. At the end of next month, they send another one for their regular credit customers, so that there's no disparity on how much I owe you. This is the amount I'm owing you. So when the supplier statement, when the customer also received the debtor, when he received the supplier statement, he also look at it and compare the information he has in his own record with the information that the supplier has on the statement that he has provided. And any difference between the supplier statement and the statement that was provided would also be what? Be investigated, will also be investigated. And you just look at the two accounts together, compare what's going on here, what's going on here. Why am I having these balances on my account? Then you look at it. Usually you start from the statement and you have the ledger account and you compare both together. So let's look at an example to be able to buttress home our point today. But before then, let's look at some of the bookkeeping errors that may cause the difference. So sometimes you see the supplier might have omitted a transaction from the statement, right? And sometimes the customer might have also omitted transaction from the statement. Transactions that have been omitted, right? Either it can be because of sales, it might be purchase, it might be discount that they omitted, it might be all these contra entries. I explained contra entries the other time. All these set-off that we're doing, they are contra entries. They are in and out. Pay me here, I take away here. So you understand? I'm owing you money here. You're owing me money here. We balance it to nil each other out. That's contra entry. All the difference must be identified and explained, and when necessary, they must be corrected. The two balances normally should be equal. Any difference, you must find out what is the cause of the difference. And the cause of the difference is usually you have supplier omitted one transaction in the statement, or posted the wrong amount in the statement, or the customer, on the other hand, omitted one transaction in the statement and posted another in the statement. So like the other question that I said the other time, I'm also going to take only one of these, and you will have all these to do as assignments. You must get yourself prepared and get ready into the exam mode. So I'm going to solve this first question. Madam Abike received this. So let's go into, let me bring out my Excel so that we can do this. Or would you like me to solve the second one? Which one do you want? Let me solve the second one or the first one.
The first one is okay.
I solved the first one.
Yeah.
Okay. The first one, here we go. So we are going to do, Madam Akibike received a statement of account from the supplier, Aruna. So Aruna is what? The supplier. Madam Abike is the customer. Madam Akibike is the customer. So this is what we are going to do. We are going to do balance on the statement, balance on the ledger, then we adjust both sides together. Let's see. This is for Madam Abike. I hope you are writing and noting all this in your notes. We'll do the one for the supplier statement, and we'll do for the ledger also. For the ledger also. So let's just do it this way. Statements, supplier statement, supplier statement. Let's leave a space. Let's do it on the side here, and we do Madam Abike's what? Ledger. So let's go back to the question. Madam Abike received a statement of account from her supplier, Aruna, indicating that the money due from her amounted to what? 171,750. Does this amount go to Madam Abike's statement or Madam Abike's ledger? Please confirm, we're almost done.
Madam Abike's statement.
What is it?
Madam Abike's statement.
It will be in the supplier statement. It was the supplier that said, so this will be the balance. Balance on the statement is how much? 191,750. Do you understand how I got the statement part? And why it is not Madam Abike's ledger? Do you understand? See, they said Aruna was the one that sent it. See, Madam Abike received, meaning that Aruna was the one that sent it. So Aruna showed, this is the statement of what what you are owing me. Madam Abike's ledger is what Madam Abike has in her own accounts, her bookkeeping accounts. Do you understand the difference?
Yes.
Okay. So in Madam Abike's ledger, you can see why the records of Madam Abike's payable ledgers show the balance of what? 109,200. So in Madam Abike's ledger, our balance is what? Balance in our ledger is what? 109,200. Is that correct?
Yes.
109,200. Yes, 109,200. So let me go back to the screen. Standing in the personal account of what? Aruna in that ledger. An investigation into the cause of difference in balance showed the following. As our usual way, we'll be picking it one by one and we'll be recording it in the different books of account. We'll be picking it one by one and we'll be putting it. So we'll be adjusting for the differences that were not recorded. So let's bring the Excel. So we'll do adjustments now. Adjustments based on what? The question. Madam Abike is yet to record the portion of cash discounts amounting to what? 3,575 disallowed by Aruna. Tell me, is this going to increase how much Madam Abike is owing or going to reduce how much Madam Abike is owing? That's the same principle. Oh. Should I remove the Excel so that I can read it?
Yes, sir.
Okay. So Motunayo, this is where we are. This first one. Madam Abike is yet to record the portion of cash discount amounting to what? 3,575 disallowed by Aruna. Madam Abike is the payable, right? Discount disallowed. Will it increase your payables or will it reduce your payables? Start from there.
Madam Abike is less.
Okay, let me do it this way. Use discount allowed. Will discount allowed by Aruna, will it reduce your payables or will it reduce, will it increase your payables or will it reduce the payable of Madam Abike?
Reduce the payable.
So what is the other way for discount disallowed? That was discount allowed, Abi. Now, if you disallow the discount, will it reduce it or will it increase it?
It will increase it.
I can't hear you.
It will increase it.
It will increase it, exactly. It will increase it. So this is what in the books of what Madam Abike. In case the English is like maybe trying to scatter your head, put it in your own first form. Then what you revert it to the other one. Discount what? Disallowed. Adjustment for discount disallowed. So what? We'll be using it to increase Madam Abike. So it is going to be a plus or minus 3,575. Are we going to remove it here or we are going to add it here in Madam Abike's ledger?
We add it.
3,575. We are going to add it because adding will what? Increase Madam Abike's receivable. Thank you. Now let's look at the second one. Madam Abike returned goods worth 25,350 to Aruna, which Aruna has not yet what? Allowed. Madam Abike returned goods worth 25,350. Are we doing this from the, let me open it so I can see. Are we adjusting this from the supplier statement, or are we adjusting it from Madam Abike's ledger? Let's even start from there. Are we adjusting this from supplier statement, or we are adjusting it from Madam Abike's ledger? See, look at it now. That one is even the easiest part. Madam Abike returned goods. What this to Aruna? They said what? Aruna has not yet what? Allowed it. In the statement Aruna sent, it did not include these goods that Madam Abike sent back. So what are we going to do? Are we going to subtract it from what he sent, or we are going to add it to what he sent?
We are going to.
Motunai, I can't hear you again now. What's going on?
Yeah, we are going to add it.
We are going to add it. We are going to add it. So yeah, we will write what? Returned goods. How much is it? No, are we going to add it? No, now we are not adding it now. This guy is saying that you owe me 191,750. And I'm telling him that, okay, I returned some goods back to you now. Right? Will I still owe him up to that amount? I'm going to reduce it now. So it's going to be minus 25,350. Just put it in your layman language. You will understand where each one is going to. Let's go back to the question. Madam Abike's cash payment of 43,625 for part settlement has not been allowed by Aruna. Which statement are we adjusting from? Aruna's part or Madam Abike's part? Let's start from there. Should I remove my Excel so that you can see it?
Aruna's part.
Aruna's part. Are we removing from what Aruna sent to us, or we are adding to what Aruna sent to us? Are we removing from it, or we are adding to it? Are we owing Aruna more money? Or,
We are removing.
We are removing because what? We paid him 43,625, and in what? It did not include it. We'll tell him that, okay, yeah, take your statement and go and do what? Affect that one. This is what we call cash payment. Cash payment. Now let's look at the last part. You are the one that will tell me everything about it. Bill receivable of 10,000 naira issued by Madam Abike and accepted by Aruna was omitted in the statement from Aruna. I'm listening. Should I bring out my Excel? When you want me to bring out my Excel, tell me, I'll bring it out and you tell me everything I should do. I'm listening. Are you there?
Yes, sir.
Oh, yeah, now. Bills receivable. Huh?
Aruna.
We are adjusting from Aruna because Aruna did not put that information. Okay, I agree. Let me bring out, so Aruna, bills receivable. Are we adding or we are subtracting? That's now my question. Motunaya, what's bills receivable?
It's like a check.
Okay, so if you give somebody a check, they said it was issued by who? By Madam Abike and accepted, right? Can you see the accepted here? By Aruna. was omitted in the statement. So now that I've explained that part now, are we subtracting or are we adding?
We are adding.
What do you say?
We are adding.
You were owing somebody 191,750. You gave the person a check of 10,000 naira. Will you add it to your amount that you were owing, or you will reduce it from the amount you were owing the person?
I will reduce it.
Exactly. Minus 10,000. So you are reducing the amount that you are owing the person. So your new amended balance, this one will now be what we call our amended balance, right? After our adjustment, or you can put it as maybe outstanding amount owed after adjustment. Do you understand? Our new amended balance or adjusted balance would be this minus this minus this minus this, right? So you can just sum everything together. If you sum everything together, see what our figure is from what? From the supplier side. This is our figure. Let's go to Madam Abike's side. Let's see if we will get the same. Adjusted balance. So this one I'll use amended balance. This one I'll use adjusted balance, so that you know that you can use any of the figure. Let's sum it together. Sum it together. Did we get the same answer? Can you see? Let me
Yes,
fold my screen. Can you see the answer?
yes, sir.
So please, these questions that I didn't solve, this second part, add it to the assignment. Look at it, but let me just run through it. Emmanuel received a statement of account from customer Kachi showing a balance. Eh?
You want to do that one?
No, I'm not doing it.
Okay.
I'm saying that you should add it to part of your assignment. So I'm only running through it to tell you that it's not hard. Emmanuel received a statement of account from customer Kachi showing a balance to be paid of 5,009. Emmanuel's payable ledger for this shows this. You first of all do this guy's statement of account and what this guy's ledger. Then you start posting all this. First thing is to know which account, which statement am I using? Am I posting into the supplier statement, or am I posting into the ledger? Once I find that one out first, and I say, is this thing that happened, is it increasing my amount I'm owing, or is it reducing the amount I'm owing regarding that particular ledger or that particular statement or ledger that I want to post into? Then that will now give you how to know. Put it in your own normal layman. I dey owe Sumbo 5,000 naira. I give Sumbo a check of 5,000 naira. How much am I owing Sumbo after? My money I'm owing Sumbo will do what? Will reduce. If it's reducing, I put minus. If it is increasing, I put plus. So that is it about that. And I have served some assignments for you. It's not much, but make sure you attempt. I think it's about 4 questions. Plus this one here will make it 5. So you can see this, make the necessary adjustments in the receivable control account. Calculate the amended receivable ledger control account. Receivable, this one is still the same receivable control account. Number 3 here is for you to prepare a trade receivable control account and a trade payables control account from the information that we're given here. Number 4, you have to prepare the trade payable and receivable control accounts too. So practice these questions. I will see you in my next class. Is there any question for me? Any other area you want me to attend to?
No, sir.
No. Thank you so much. Thank you for always sticking by. I always appreciate that. You are owing me 2 assignments now that I have not submitted, one from last class and from this class. Please, as usual, as you have always done, attempt it, send it in for marking. Thank you so much for joining the class. I'll see you next class. Thank you so much. Bye.
Thank you.